Did you know that the oldest known form of trade was not with coins or paper money, but rather with cattle and grain? Yes, before the advent of coins and paper money, our ancestors relied on the barter system, a form of trade where goods were exchanged for other goods. This was an era where a cow might be your currency, or a bushel of wheat could buy you a new pair of shoes. Now, while this system of trade was simple and direct, it had its fair share of limitations. One of the most significant challenges was the lack of a common measure of value. How do you determine how many chickens are worth a cow, or how many bushels of grain equals a piece of cloth? This was a complex issue that often led to disagreements and conflicts. Another drawback was the difficulty in storing wealth. Unlike coins or paper money, cattle and grains couldn't be easily stored. Cattle could die, grains could spoil, and both were difficult to transport. You couldn't just put your cow in your pocket and head to the market. So the system was not exactly practical or efficient. Also, the barter system was limited by the coincidence of wants. This means that trade could only occur if two people each had something that the other wanted. For example, if you had a cow and needed shoes, you needed to find someone who had shoes and wanted a cow. This often made trade complex and time-consuming. Despite these limitations, the barter system laid the foundation for what we now know as trade. It was a system that was born out of necessity and evolved over thousands of years, giving birth to various forms of currency that we're familiar with today. So, how exactly did we move from trading cattle to using shiny metals and paper bills? Let's dive into the fascinating journey of money. Around 5000 BC, the first known form of currency was born, not in the form of paper or plastic, but in the form of metal coins. In the vast expanse of human history, this was a significant turning point. It marked the end of the era of bartering and the beginning of a more structured and standardized system of trade. Now let's travel back in time to ancient China. The earliest coins in China, known as spade money, were cast in bronze around the 11th century BC, resembling miniature versions of farming tools. However, these weren't just mere trinkets. They were a tangible representation of value, a concept that had been elusive until this point. Meanwhile, on the other side of the globe, in ancient India, coins made of silver and gold were being minted. These coins, often beautifully adorned with images of deities and emperors, not only served as a medium of exchange, but also as a form of art and a testament to the grandeur of the ruling dynasties. The ancient Greeks too had their unique take on coinage. Around the 6th century BC, they began minting coins from electrum, a naturally occurring alloy of gold and silver. These coins, stamped with intricate designs, revolutionized trade in the Mediterranean and beyond. The advantages of coins over barter were manifold. First, coins were divisible, making it easier to make change and engage in more complex transactions. Second, they were portable, allowing traders to carry large amounts of wealth with relative ease. Third, coins were durable, resisting wear and tear over time and retaining their value. But perhaps the most important transformation coins brought about was psychological. They provided a tangible representation of wealth, making it easier for people to understand and accept the concept of stored value. But as societies grew and economies expanded, the need for a more flexible form of money became evident. Thus, setting the stage for the next phase in the evolution of money, the dawn of paper currency. But that, dear listener, is a tale for another time. In a world dominated by metal coins, the introduction of paper money in the 7th century China was nothing short of revolutionary. Picture this. Instead of hauling around hefty sacks of coins, traders could now carry lightweight, convenient paper notes. This was a game changer. The Chinese Tang dynasty was the first to issue paper money, a system built on the foundation of earlier credit vouchers. These notes, known as jiaozi, were initially used by merchants and wholesalers for large transactions. They were easier to handle and far more portable than coins, and this made trade flourish like never before. But the concept of paper money raised an interesting question. What gave these pieces of paper their value? After all, unlike coins, they weren't made of precious metals. The answer lies in a concept that's still fundamental to our understanding of money today: trust. The Chinese government promised to redeem these paper notes with something of equal worth, in this case, coins. This promise, or guarantee, is what gave these notes their value. This is the basis of what we now call fiat money. Fiat is a Latin word that means, "let it be done." In terms of currency, it refers to the decree by a government that a certain item must be accepted as a form of payment. Fiat money has value because the government maintains that it does, and the people in its jurisdiction agree to its value. As the centuries rolled on, the concept of paper money spread from China to the Middle East, then to Europe, and finally to the rest of the world. It was the next logical step in the evolution of money, paving the way for the financial systems we know today. But the journey of money's evolution was far from over. With the dawn of the 20th century came the birth of credit cards, followed by digital transactions and online banking. And as technology continued to advance, money continued to evolve. As we moved into the digital age, the evolution of money took another dramatic turn. In the blink of an eye, money went from being physical to digital. Our banknotes and coins turned into numbers on a screen. You see, as the world embraced the internet, so did our money. Digital money, or electronic money, came into existence, giving birth to a new era of transactions and trade. The concept was simple, yet revolutionary. Money was no longer a tangible object you could hold in your hand, but rather a digital entity that existed in cyberspace. The rise of digital money was swift and impactful. It was a byproduct of the age of the internet as people started to value speed and convenience above all else. The traditional ways of banking, with their long queues and mounds of paperwork, were suddenly perceived as archaic. Enter online banking. It was a game changer. People could now manage their finances from the comfort of their homes, or from wherever they wanted, really. The world was at their fingertips. Payments became instantaneous, money transfers were just a click away, and shopping became a round-the-clock affair. The convenience was undeniable. But it wasn't just about making life easier. Digital money opened up a world of possibilities for those who had been left out of the traditional banking system. For the first time, people without access to banks could participate in the global economy. They could start businesses, send and receive money, save and invest, all with a few taps on a screen. But of course, with new technologies come new challenges. Security became a major concern. Cyber attacks, fraud, and identity theft were real threats that needed to be addressed. But as always, technology found a way. Encryption, multi-factor authentication, and other security measures were put in place to keep our digital money safe. The digital revolution transformed the way we perceive and use money. But as we all know, change is the only constant. And so it was with money. The world was ready for the next step in the evolution of currency. Digital money was just the beginning. But the evolution of money didn't stop there. We are now in the era of cryptocurrency. Imagine a form of money that is not controlled by any government or financial institution. Welcome to the world of cryptocurrency. Cryptocurrencies, in essence, are digital or virtual currencies that use cryptography for security. They operate on technology called blockchain, which is a decentralized network spread across numerous computers that manage and record transactions. One of the key advantages of cryptocurrencies is their decentralization. They are not governed by a central authority, which means they are immune to government interference or manipulation. Another potential benefit is the high returns they can offer. Cryptocurrencies like Bitcoin and Ethereum have seen their value skyrocket in the past few years, turning early investors into overnight millionaires. However, it's worth noting that the crypto market is highly volatile and investments can just as quickly depreciate in value. From cattle and grain to Bitcoin and Ethereum, the journey of money has been a remarkable one. The evolution of money and trade has not just changed how we buy and sell goods, it has changed our lives in profound ways. As money evolved, it became more than just a tool for local transactions. It transformed into a universal language, understood and accepted globally, facilitating trade between nations and cultures and driving economic growth. The advent of digital money and cryptocurrencies further pushed the boundaries by enabling online shopping and e-commerce, shrinking the world into a global village. With just a few clicks or taps, we can now purchase goods from the other side of the world, something unimaginable a few decades ago. But the story of money doesn't stop here. Its evolution continues to shape our societies, influencing our values and behaviors. It's a powerful tool that not only allows us to express value, but also reflects our aspirations and dreams. In the end, money is not just a tool for trade. It is a reflection of our society, our values, and our vision for the future.